Welcome back to Investing Talk Podcast. We're here to break down the latest insights and help you get smart on what matters most in the markets. Today, we're turning our focus on SentinelOne's upcoming earnings report. This is a company that's really navigating a fascinating transition in the cybersecurity landscape. We've pulled together, a stack of sources, analyst reports, company statements, market data to give you the most important nuggets, the surprising facts, and, well, what to keep an eye on.
Right. Our mission today is really to cut through the noise and zero in on SentinelOne's Q2 FY26 outlook. We'll be looking at the analyst consensus, historical performance, key market trends, basically so you can quickly grasp the full picture. Think of this as your shortcut, maybe, to being genuinely well-informed without drowning in all that data.
Absolutely. And before we really get into the weeds here, if you find value in what we discuss, please do take a moment to subscribe, like, and leave a comment. It genuinely helps us out. And if you're feeling generous, maybe consider buying us a coffee. The link's always down there in the description. Also, super important, if there's a specific company you'd like us to examine, let us know in the comments below. Okay, let's unpack this. So, let's kick things off with the absolute fundamentals. What's the immediate horizon looking like for SentinelOne? When are they actually dropping their numbers? And what's the buzz on Wall Street for this report?
Okay, so SentinelOne is scheduled to report its Q2 FY26 results after the market closes on Thursday, August 28th, 2025. And the conference call for investors, where they dig into the details, that'll follow at 1:30 p.m. Pacific, which is 4:30 p.m. Eastern Time. Now, in terms of expectations, the analyst consensus is actually quite clear and pretty tight. For revenue, the consensus is sitting right around $242.0 million. What's kind of noteworthy here is that this figure is consistent across major trackers like Zacks, and it aligns precisely with the company's own pre-announced guidance midpoint, also $242 million.
So there's a pretty tight alignment there between analysts and what the company's already signaled. That's interesting. But what about the bottom line? Revenue's one thing, but profitability, especially for these kinds of companies. What about earnings per share or EPS?
Yeah, good question. For EPS, the Zacks consensus is $0 or 3 cents. And just to clarify for everyone listening, EPS, earnings per share, that's basically the company's profit divided by its outstanding shares. Gives you a sense of profit per share of stock. Interestingly, for SentinelOne this time, there really isn't a widely cited whisper number that's much different from that $0 or 3 consensus. Most commentary seems to point right at that figure.
Okay.
So it suggests expectations are fairly, grounded there, not a lot of hidden drama baked in, it seems.
Right. That gives us a solid starting point for what to watch for next week then. Now, understanding the past, that can often shed light on the future, right? Especially with earnings. How has SentinelOne performed in recent quarters? Any notable surprises?
Well, if we look back at the last 4 quarters, there are some interesting patterns. For Q1 FY26, reported back on May 28th, 2025, SentinelOne actually issued Q2 revenue guidance of, approximately $242 million. Now, that was slightly below the consensus at the time, which was around $245 million. So a little bit cautious, maybe. And the EPS for that prior quarter was cited at 0.22 cents.
So a bit of a mixed signal there, yeah. Guidance slightly under expectations back then. What about before that? Was that consistent or more of a one-off thing?
Prior to that, actually, 3 fiscal year 2024, the company had a pretty strong track record.
Yeah.
Consistently delivering beats on both revenue and EPS estimates. Like, for example, Q4 FY24 revenue was $186.36 million, beat estimates. EPS was negative $0.04, but that was better than the negative $0.02 consensus.
Okay.
Similarly, Q3 FY24, $164.2 million revenue, EPS negative $0.08 versus negative $0.03 estimate. And Q2 FY24, $149.42 million revenue, EPS negative $0.14 against negative 0.8 estimate. So beating revenue, but EPS misses there. But what's really fascinating, kind of a turning point, is something Zacks highlighted. The quarter ending July 2024 actually printed an EPS of $0.01. That was against a negative $0 estimate.
Okay.
A positive surprise there, and it really marked a shift.
That is significant. So we're seeing this trend moving towards profitability. Can you elaborate a bit more on these key metric trends, especially that push into the black?
Absolutely. So one major trend is, of course, revenue growth. That's been running consistently in the low 20% year-over-year range heading into this upcoming quarter. Zacks specifically reports a plus 21.65% year-over-year growth for this July 2025 quarter. So still expanding at a pretty healthy clip. Crucial for a tech company.
Right.
But maybe even more significant is what we're calling the profitability inflection point. The current consensus, like we said, is for positive EPS of 0.03 cents.
Hmm.
That stands in really stark contrast to the losses we saw in those prior periods, right? The negative 0.0 to negative 0.08.
Yeah.
This suggests real improvements in operating leverage. And for you listening, operating leverage basically means as revenue grows, profits grow even faster because fixed costs are spread out more. It shows efficiency.
That's a great explanation. So it's not just about being profitable, it's about how efficiently they're getting there.
Exactly. In a sector where, a lot of high-growth companies are still burning cash, SentinelOne getting to positive EPS, it suggests a real strategic pivot, maybe towards operational efficiency. The insight isn't just if they're profitable, but how sustainably they can scale those margins, especially with big competitors out there.
Yeah, that shift from losses to profitability is a huge deal for investors. It really signals a maturing business. Now, stepping back from the numbers for a second, what else has been going on with SentinelOne or even in the broader cybersecurity sector this past quarter? Any big news?
During the quarter itself, the company's main announcements were pretty procedural, mostly about the timing of these Q2 results and participating in investor conferences. So no dramatic market-moving pre-announcements beyond that guidance we already talked about. Seems like they've been, keeping things fairly quiet leading up to the report.
Okay, so nothing major from the company itself. What about the sector? How's cybersecurity been doing overall, and how SentinelOne fared compared to its peers? Riding a wave or...
Actually, it's been a bit tougher for them recently. Zacks notes that SentinelOne's shares have lagged the broader tech sector leading into August, down about 7.3% over that period.
Ooh.
Yeah. Analysts are pointing to, risk-off conditions in the market, investors pulling back a bit from higher growth names, and maybe some selective rotation within cybersecurity itself as earnings season gets going. Kind of like the market saying, okay, show me the proof, show me the profits.
Right. Less tolerance for just growth at any cost, maybe.
Exactly. And this connects back to the bigger picture, right? The analyst commentary leading into this report really emphasizes that combination. The year-over-year revenue growth, still over 20%, and that big year-over-year EPS improvement. The whole narrative is really about their margin trajectory now. Can they keep growing while proving this profitability is sustainable? That's the tightrope.
Makes sense. Okay, speaking of the stock itself, let's talk technicals. How has the price action looked for SentinelOne heading into earnings? Any key levels we should be watching?
Well, heading into the report, the stock closed at $15.81 in the last session cited, down about 1.4% on that day. And like we just said, it's been trailing the sector, which suggests, maybe somewhat muted expectations or at least some caution from investors. It's definitely not running hot into the print.
Okay.
For key price levels. Recent data suggests some psychological support down near the mid-teens, specifically around that $15 mark. That's a level traders might look at. On the upside, resistance looks like it could be in the high teens based on where it's pulled back from. Our sources don't give exact numbers, but watching that, say, $17 to $18 zone, that could be an initial area where sellers might step in.
Got it. $15 support, maybe $17, $18 resistance. What about implied volatility? Does the options market give us any clues? How much of a move is baked in post-earnings?
Yeah, unfortunately, the sources we looked at didn't specify the exact options implied move for SentinelOne, which is a bit frustrating.
Oh.
But, just based on typical setups for mid-cap cybersecurity names before earnings, you often see moves priced in the high single digits to maybe low double digits, percentage-wise.
So maybe 7 to 12%, something like that?
Could be. Something in that ballpark wouldn't be unusual. But again, for SentinelOne specifically, we don't have that hard number here. Just got to keep that in mind.
Right. Okay, so with all that context, the numbers, the history, the market, the price action, let's get to the really interesting part. What could actually happen when SentinelOne reports? What are the potential scenarios?
Okay, yeah, we can map out two main paths here. The bullish case and, the bearish one. In the bullish case, you'd be looking for a classic beat and raise. So revenue coming in clearly above that $242 million consensus. You'd also want to see upside surprises on things like billings, that's the total invoiced amount, a key future revenue indicator, an RPO, remaining performance obligations, which is contracted future revenue. Strong numbers there signal really robust demand. EPS would need to be at, or ideally, above $0.04, showing stronger margins, good cost control. And then, crucially, they need to raise their full-year guidance for FY26, probably chongs, with positive commentary, about winning big new customers, more platform adoption, showing they're competing well.
Makes sense. Beat the numbers, raise the outlook. What about the flip side? The bearish case? What would that look like?
The bearish scenario.
Yeah.
That involves a miss, or maybe just as bad, a guide down.
Hmm.
So revenue coming in below $242 million, EPS at or below $0.02, maybe even dipping back into negative territory slightly. What could drive that? Maybe softening net, new ARR, annual recurring revenue, or weak billings, meaning they aren't signing up new business fast enough.
Right.
Or maybe margin compression costs growing too fast. Or perhaps they talk about sales cycles getting longer, deals taking more time to close. You might also hear cautious comments about competition. Feeling pressure from CrowdStrike, Palo Alto Networks, the big guys. That could really dampen the outlook for the rest of the year and lead to full-year guidance that misses current expectations. That would definitely hurt the stock.
Okay, so those are the two main possibilities. Given all that, if you had to pick one single metric, the most important thing for listeners to focus on when SentinelOne reports, what would it be? What's the absolute bottom line here?
If we really zoom out, connect it to the bigger picture for investors, the most critical metric, I think, has to be forward guidance, specifically what they say about revenue and operating margin, or EPS, for the next quarter, the October quarter,
Right.
and really importantly for the full fiscal year 2026.
Right.
The stock's performance, especially after this report, it's just so tied to their ability to prove they can sustain this profitability while keeping that 20% plus growth going. That balance.
Yeah.
That's what the market will be watching like a hawk.
That's a really clear way to frame it. Okay, so bringing it all together then. Based on everything we've discussed, what's our overall leaning for SentinelOne heading into this report? Bullish, bearish, somewhere in between?
Given all the factors, the overall leaning is pretty neutral. I'd say the confidence scores may be a 5 out of 10, right down the middle.
Okay, why neutral?
Well, the estimates are just so closely aligned with the company's own guidance, right, for both revenue and EPS. And the stock has underperformed heading into the report. So that kind of limits the potential for wild upside exuberance, but it also maybe lowers the bar a little bit. A modest beat seems plausible, maybe even likely, but any large move after earnings, up or down, that's probably going to hinge almost entirely on the clarity and the strength of that forward guidance. That feels like the real swing factor here.
Okay, neutral leaning, guidance is key. So what does this mean for someone thinking about a strategy around this earnings report? How might different types of investors approach this, say, someone more cautious versus someone more willing to take risk?
Right. So for the more risk-averse person, it probably makes sense to just wait. Wait for the guidance to come out, maybe even wait for the first 15, 30 minutes after the conference call starts.
Let the dust settle a bit.
Exactly. Avoid that initial knee-jerk volatility. Alternatively, if you do want some upside exposure, maybe hoping for guidance raise but want to limit risk, you could consider a small, defined risk call spread. That option strategy limits your potential loss.
Okay, and for those who are a bit more risk tolerant?
Well, for them, event-driven option strategies could be on the table if implied volatility was high, which, again, we don't know for sure here. Things like short-dated strangles, betting on a big move either way, or maybe iron condors, betting on it staying in a range. But, and this is crucial, if you're doing that, you have to size positions conservatively. Use defined risk. Know your maximum loss up front.
It's absolutely critical.
Directionally, based on the price levels we talked about. Maybe a call spread positioned above that $16, $18 range, or a put spread down towards $15 could express a view depending on your bias while still managing risk.
What an incredibly thorough look at SentinelOne's upcoming earnings. We've really managed to pull out the most important points, I think, from the consensus numbers and the history to what might happen and what to really watch for.
Yeah, indeed. And that journey, from just consistent revenue beats to actually projecting positive EPS, that's a pretty significant evolution for SentinelOne. Shows the business model is maturing. The real question now, the one hanging in the air, is just, can they sustain it? Can they keep this profitability going while maintaining strong growth? And what will that outlook tell us about finding that balance for the rest of FY26?
Exactly. And that really highlights the power of digging into these details, right? Seeing the bigger picture emerge from all the data points. We really hope this analysis gives you, our listeners, a clearer picture and helps you feel much more informed. Remember, the market is always offering new lessons, maybe something to think about as you process this. What aspect of a company's earnings do you personally find most challenging to interpret? Just a thought to mull over. Thanks so much for tuning in to Investing Talk Podcast. You can find us wherever you get your podcasts. Make sure to subscribe so you don't miss our next analysis. Until then, happy investing.